Welcome back. Still holding on to those levels above the mark of 23,950 is the index. Good time to get in the latest trends from the FNO space. Mangalam is joining in from the FNO desk. Mangalam.
Well, it's understandable that we're seeing some bit of, profit booking at the higher levels. But the important part is that it is a very strong day of trade so far. The Nifty Bank, after having seen a bigger rally, is moderating a little bit in the sense that it's not growing as fast as the Nifty, but it's still higher in today's trading session so far. The mid-cap index is also outperforming. So the sentiment is fairly strong. The good part is that over the last half an hour or so, we did see some traction build in the IT space as well. So that's an important segment to track for the market. So let's see whether the IT stocks can get, some of their fervor back. If that happens, then, you have 2 or 3 engines fighting for the frontline index. The India VIX is moderating, so that's a positive. Alongside that, you have the benefit of a lot of FII short positions. So, the start of last week, the FII longs were just around 9.5%, rather 7.5% to be precise, and that jumped all the way up to 12% throughout the week. But still, the FII positions are 88% on the short side. And as we speak, if you look at the Nifty futures, the open interest is down with the Nifty futures being higher. The Nifty financial services as well, the futures of that index are, seeing some bit of long unwinding. And as a result of which, we are seeing a fair amount of shorts being covered, at least on the Nifty. So that's something that we will monitor as we go along. And the short covering is not just limited to some of the index futures. If you look at the calls as well, all those were written the 23,600, 23,700, 23,800 calls, hoping for some resistance to come by, then have been caught on the wrong side. So they are swiftly unwinding their positions, and that's caused this up move in the frontline market, and that's holding it up as well. And while that has happened, a lot of the put writers are back into the fray as well. So 24,000 put writers are very active, telling you that maybe if the Nifty crosses above that 24,000 mark, there will be a lot of support coming in at the psychological mark. But right now, 24,000 put trading at a premium of near 120 rupees tells you that the support of the market has moved higher towards the 24,850 to 23,850 to 23,880, 890 thereabouts. So we've also seen writing at the 23,900 put. The Nifty put call ratio slightly higher, but it's moderated from the peak today, so that's creating some headroom for growth as well. And the important part, despite this up move that we've seen, there are some technical supports that are very strong for the market. The 50-day moving average, 23,719, is an important support on the lower level. And on the way up, for the next leg of rally to come by, we will have to have the Nifty cross that 24,300 mark, which is the 100-day moving average, because once we do cross that, then the road to 25,000 opens up, because that's where the 200-day moving average is.
All right, Mangalam, thanks very much for setting that up for us. It's a good time to invite Seshadri Sen from Emkay Global Financial Services for his views on the market fundamentals and sectoral picks. Seshadri, thanks very much, for joining us here, for taking the time out. Let's start with the news of the day and the reaction that we're seeing on the back of the promise of that peace deal on oil prices and the subsequent macro effect. Besides the obvious sectors, the oil marketing companies, the auto, so some of the aviation names, paint companies, where do you think, we'll start to see some of the gains? Financials, for instance?
It does flow through to domestic liquidity, and short-term rates have been high for the last 3 or 4 months. We think that will start to moderate, and that always has been a powerful catalyst for the financial sector, because most, even banks and NBFCs, most of their borrowing are in the 1 to 2 year bucket. Some of them spill over into 3 years. So when that borrowing comes down, there is a general feel-good factor that spreads around that entire sector. We've already seen the credit cycle recover very sharply from the second half of FY26, and we expect that momentum to continue. So financials as a short-term, as a second-order beneficiary of this is fairly obvious. You could play through some of the wholesale borrowing dependent banks or some of the NBFCs. I think the NBFCs, which have underperformed for some time, are showing a very strong recovery today. The second is the consumption cycle itself. We've been talking about it since last year. After the GST cut, we did see a very strong recovery in the consumption cycle. There was some skepticism of whether it would spill over into FY27, but the track record so far has been quite good. Now that this headwind is out of the way, there is uncertainty. There was uncertainty about supply chains, prices, availability of finance. All of that is now out of the way, and I think the momentum in the overall discretionary consumption cycle in India will continue to be fairly strong. So these are two second-order beneficiaries that we see. Consumption, and there again, autos comes into play as one of the best ways to play this theme, and financials.
Seshadri, morning. Thank you for joining in. You mentioned autos. A specific question on that as well. The numbers so far have been fairly strong, fairly robust. Yes. And the commercial vehicle segment also is an indirect beneficiary because of the falling oil prices, then therefore the costs coming down and so on and so forth. But the entire sector right now is heading towards a bit of a headwind in the form of a subpar monsoon forecast. And if that happens, does the entry-level auto segment gets impacted because of a subpar monsoon, and therefore the commercial vehicle cycle as well, particularly so on the tractors front? And then, of course, because of a subpar monsoon, if inflation goes up and so on and so forth, that second-order impact on the sector to be felt as well?
I think the impact of the monsoon will be a little bit overdone. Yes, there is some impact. Different categories will obviously have different levels of impact. And, as you just discussed, for example, the tractors is disproportionately hurt. But there are other tailwinds for the sector which should be able to allow this industry to be able to deal with a slightly subpar monsoon. We also note that, in the last few times that, monsoons have been, the government's done a very good job in keeping inflation under check. So yes, rural incomes and farming incomes may get impacted if there is a drop in overall crop production. But for the rest of the ecosystem, the second-order impact on inflation, etc., may not play out as badly as it has, say, 10, 15 years ago. So I would be, I wouldn't worry too much about a subpar monsoon. Yes, it will have an impact. It will be different across categories, but there are enough tailwinds to carry the industry through that kind of a blip.
Seshadri, be that as it may, that's the auto side. But what about the consumption side, the FMCG names and the rich valuations there? You see a further upside, you see some of the demand getting hit. And, very quickly, also, if you could share your thoughts on the pharma pack, which has been doing relatively better of late. Do you see further upside in the near term?
Yeah, we are sort of neutral on pharma, stock selective, and I think that sector will continue to do well. It's a good, nice structural play. Valuations are a little stretched, but the quality of earnings is improving across the board. So some of those valuations are worth paying. They're not a high beta sector which will immediately explode, upwards. But from a long-term compounding perspective, we continue to like.
What's driving your thesis behind this textile names?
Well, I think the FTAs are a significant structural positive for the textile sector. So for a long time, the textile sector, India Textiles, has struggled competitively with many other countries in the region because there have been unfavorable tariffs, not just in the US, but many other regions as well. With the UK and EU tariff, FTAs coming through, and will take some time to operationalize. But once they are done, I think that will open the door for the textile sector to start competing more effectively. So yes, from a slightly longer term perspective, we remain. You're right that some of it is in the price, but we remain constructive. And again, if the resolution of the tariff issues with the US will also be a major positive for the sector.
All right, Seshadri, appreciate you taking the time out and joining us here with those views. Thanks very much for that. We'll slip into a short break now, but on the other side, Reliance Jio